Welcome to Java. Thank you kindly for joining me. This is April 10th, 2025, and it's Thursday. There was quite a bit that happened on a seriously volatile trading day yesterday. A lot of back and forth, a lot of this due to the tariffs. A 90-day pause came in. We've got a lot to cover, a lot to talk about, so we'll get started right in, as always, with the markets now. Fear Group meter has risen significantly. We're at 16 now. Was at 3 yesterday, but we're still in extreme fear territory. Now, this is the uh, deepest fear route, if you will, for going 7 weeks in quite some time. So what have we got today? We are looking at the daily driver is CPI, core inflation. These are numbers the Fed is going to be looking at, so that is why they could potentially move markets. They're looking for the Fed to cut. I don't think they're going to anytime soon until there's serious pain. Now, as far as inflation, that's kind of a given. We know that inflation is going to continue. The only question is how much, how fast we are headed more towards it. That is intentional. So, one thing I'm looking at behind this actual number, though, is we've got a divergence going on between goods and services. And the reason this is really important is that a lot of companies depend heavily upon goods are going to get hit much harder as the goods are inflating a lot more rapidly. Now, this is due to production as well as resources and several other factors. But when you're looking at your investing and other things going forward, that will make a difference. Now, we've got what the administration in the United States is calling beautiful bonds. The problem behind them is that there is a serious lack of liquidity, and the quote on this is that they are concerning. Well, they're massively concerning because there are no buyers for these. Now, yesterday we've watched that 10-year yield spiked very rapidly in a manner we don't want to, and it was just by coincidence, or so they say, that shortly after that, um, Donald Trump announced that they would do a hold, and this is kind of a conditional hold, 90 days, on the tariffs moving forward. That dropped the bond market, made the market spike yesterday, and it was very interesting. Now, just prior to that was the bond market sale. The movement in the bond markets happened the evening prior, and what the suspicion is, there it's not for certainty yet, but that it was Asian countries selling off those bonds, and as they sold them off, it caused that yield to spike. Now, during the sales in the day, there was a lack of buyers, some buyers going to safety, but the Federal Reserve had to step in and buy these bonds, and they've got this designed this way so that they can print their own dollars and then export the inflation. So all of this causing that, as it says, stock market staged an epic rally after they did announce this 90-day conditional pause. So volatility is going to continue forward, perhaps not as violent as it was yesterday. We've had the best moves and the worst moves within a couple of days, the past few days. So extreme volatility, as we've been saying. Now, we've got this saying, hold please. This is in relation to the banks. Now, they're going to be announcing earnings for several large banks starts Friday, tomorrow. So those could potentially move markets as well. They are in a lot of the all of the lending forward. I will speak about that in a little bit, but they need these rates to kind of stabilize a bit when they spike like this and stay high. It is bad for them as well as the yield curve. They're trying to restructure, no guidance forward, having issues with this. Now, the last thing I want to mention about these numbers is oil and gold. They are telling a story of stagflation. What does this mean, and what do we watch for between the two? Now, oil is, both are being manipulated. Don't get me wrong. I want to clarify this. However, even through this manipulation, what oil is telling even through the supplies and a lot of what is going on with the drilling, is that oil is showing a lack of demand. So expectations are that demand is going down, so therefore production will be coming down. With production coming down is cutbacks. Cutbacks mean job losses. So this is deflation is what it is telling forward with oil going down so seriously. It's up a bit today, back up above 60 at least, but still looking for some further weakness. Now, the flip side of this is gold, and gold is the movement of capital and assets looking for safety in the markets. So, between the two, this is a rising inflation, which gold is saying is coming, as well as lack of demand, which is what oil is telling. So, oil and gold, the story of stagflation. Now you know what you're looking for. Now, let's look at other indicators. 10-year yield at 4.296 at the moment. The number that it seems these markets are hating is 4.5. And when it hits that, particularly in a rapid fashion as it did yesterday, is the marker for room to step in. Now, whether that is through the Federal Reserve, which is quite frankly what I thought would happen yesterday, but it ended up being the tariff hold pause call that stepped in, or that policy, but they have to step in if it hits that number too rapidly. Now it's coming back a bit. Dollar losing strength because of a lot of this, and that these two going down and losing strength, pumping money into the markets yesterday. That rally also going into Bitcoin cryptocurrencies. Now these are showing down, but that's because they had quite the rally as well. Bitcoin above 82,000 now, going forward along with the story of the stagflation. Because of these and because of some of the setups, short term could be still more of a pullback for these cryptocurrencies in a larger fashion. We'll be watching to go below 78,000 again. If it does, 72 is the next marker. Now, long term, these are looking at the upward levels are around 92, 93,000. Now, this is not financial advice. You have to do your own research and think for yourself. If you're on this channel, this is kind of a push forward and just a little bit of news you can use. So with this, we've got United States stocks from yesterday after their rally. The NASDAQ did very well, but we've also got volatility up massively along with gold. So what this is telling us along with the futures is that this is not going to last. Now, we've got stocks pulling back a slight bit. They are showing much more weakness, so bit of correcting back down after the rally yesterday. But gold also set for a bit of a pullback. Now, I'm watching gold at this 3,100 level. If it goes down to 3,000, we'll see where it goes from there, because the reason is this could set a level at 3,100 and then really rally from there again. We have to wait and see. A lot of uncertainties. So if you're in doubt and you can't afford this uncertainty, it's best probably, as they say, sit on your hands, watch from the sidelines. Okay, we've got Thursday calendar coming in, jobless claims, and then CPI is the big one. But after this, a whole list of Federal Reserve people coming out to talk, and they can, as I said before, they can manage the markets with what they say as they manage these expectations going forward, as far as whether the market is going to get easy money, which I don't believe it is at this point in time. We're going to have to watch more factors coming in before they would do that cut. So we got a couple of geopolitical things. First, domestically in the United States for the markets, House GOP, this is Republican Party, some of them are postponing a vote on the new budget bill. They're calling it a big, beautiful budget bill because hardliners in this party are looking for deeper cuts. And the reason they're saying this is because it's not balancing the budget enough in order to be sustainable. And while they are correct, they do need to get a deal done. So they're vowing to try again Thursday today And of course, the Democrats calling the plan reckless and callous. They should just raise the debt ceiling, print money, and go forward, is their view. So we've got also across the pond, European Union announcing that they're putting retaliatory measures against the United States on hold for 90 days after a similar pause on Wednesday. Now, this is coming from Ms. Ursula saying that they want to give negotiations a chance. She put this out on X. And then she also went on to say that if negotiations fail, then they will put in place their measures, protective measures. So, which is not unexpected. However, this is showing that they are indeed uh, having an effect as intended to bring them to the negotiating table. So, as some of us were positing prior, these tariffs were never meant to go fully into effect and not for long term, certainly. So, they are having their intended effect for the most part, with the exception of China. Now, I want to go into a little bit more about the ECB. They are pushing for a digital euro in order to counter US stablecoin growth. This whole push for all of this is still to move towards digital currencies. Okay, they're talking about stablecoins, the United States, digital EU. How are they going to manage this? Well, they're going to push this forward with digital wallets and pushing biometrics. So, of course, this is also going to come with a lot of other things that are not necessarily positive. One of them is Ukraine floating 23% tax on crypto income with exemptions for stablecoins. So, this is two things. First off, showing the push also towards stablecoins that they can control. Secondly, that they will be able to track 100% of all payments, and they are looking to make more income tax revenue, and they can raise it anytime they like. So, a couple of other things for Bitcoins in particular, a crypto trading firm warning of a classic bull trap if it hits 82.7. So, kind of correct in that I can't argue with that. But they are expecting global banking push into Bitcoin by the end of 2025. So long term, still bullish. You got to watch your levels. And as I said before, going to these. Now, a few more things before going into the markets. We've got a weakening economy, definitely in the underlying. We just saw this come out. 42% of mortgage refinance applications are being rejected. This is the most in history. So if people cannot refinance their mortgages, this has a definite detrimental effect on the perceived wealth effect that they have. They will start tightening their belts. This will cause anxiety and will ripple out from there. This is from the Federal Reserve Bank in New York, but I also want to put a shout out to bar chart for this. Now, we've also got record share of credit card accounts are dropping into debt as the stock market ricochets now. More than 1/3 carrying debt on the credit cards, and even more than that, don't even have credit cards. They just simply have the debt. So upwards of 46% is where it's at in the United States right now. Now, shifting to companies and what's going on, even Microsoft having a rough ride the past year, and they're talking about now they're doing cost-cutting measures, uh, thinking about more job cuts, but this time middle management up on the chopping block and anyone that is a non-coder. Now, this is one of the Mag 7, so if they're having a difficult time, you can only imagine others with less billions to spend. So a couple of last things. We've got smaller company. They've been around for a long time, sweepstakes company, Publishers Clearinghouse, but they're a sunset industry and they filed for bankruptcy. And the last thing that I want to put forward, because this will escalate if necessary, if all else fails, they bring you to war. And it is just come out, the President of the United States has warned China and other trade partners against escalation beyond the trade war because the United States has secret weapons and is saying that nobody has any idea about, Well, some people do have an idea. If you want to take a look at the Discord, we've got a lot of stuff in there. Can't put out on this channel. As a matter of fact, they're going to have a cryptocurrency chat tonight if you care to join them. So with all of this, I wish you all a wonderful day. Good trading day. If you are in these markets, if you stay out, it might be the better idea. If you can't handle, it's going to be more volatility, and it looks to be a bit weak towards going on as the day shifts, but headlines can change that. So until I see you again, my friends, stay free.